Um, Good morning, clients and remisers, trading reps, FAs. Welcome to this week's morning call. I'm Joshua, the head of research. Today we have an update on India's macroeconomics, which I think might be particularly useful to FAs. And then following on from that, we will be talking about M1. We will be talking about Sodastream and Keppel, as well as give a full analysis on Croesus Retail Trust. So let me start. Disclaimer. I'll start with India. I'm presenting on behalf of our macro team. Basically, India has seen growth stabilize. Actually has fallen slightly from 4.8% year-on-year the quarter before to 4.7% year-on-year for the last quarter. So a slight stabilization there, and actually we think that downside risks are pretty much reduced because there's been a rather good monsoon season, which will translate into better gains for the agricultural sector. Now, India is very much dependent on the agricultural sector, which remains a large proportion of output. Okay, inflation. The most important thing for India is actually the inflation outlook. And if you look at the red line here, which is the overall inflation gauge, it has been trending lower. As you can see, the purple line is the one for agriculture, and that's rather volatile. The green line is manufacturers, but overall it's been trending lower, and this has been due to the RBI being rather proactive in terms of raising interest rates, and that has got the inflation gauge on a good trend. And they have a long-term target of actually hitting 4% year-on-year inflation by 2016. The current account deficit is now much reduced after cutting gold and oil imports. Basically, there were quotas on gold, and for oil, subsidies were removed. Now, gold accounts for 35% of total imports, so that's rather significant. And with the reduced imports in gold, which is in a sense a non-productive import, the current account deficit for India has vastly improved. A proxy to that would actually be the trade deficit, which as you can see is rather stable. Okay, so macroeconomic conditions in India have stabilized somewhat. The currency has also stopped depreciating. As you can see, for the past 2 quarters, we have a stable INR. That's partly due to the raising of the interest rates, and FDI has also rebounded from the last quarter. Now, election season is underway, and this it looks as if the BJP might actually turn out to be the imminent ruling party. Now, the BJP candidate is Narendra Modi, who is heavily supported by the business and investment community, because as the finance minister of Gujarat, the previous finance, as being the previous finance minister of Gujarat, he was rather instrumental in bringing investment into that state, and which has propelled it to the forefront of India. And so, because of that good track record, I think the market is looking forward to him being elected as the prime minister, and if that is the case, then he has promised to actually put through 25 to 50 infrastructure projects that have been put on hold. So his imminent reign, if it does happen, is seen as a much more progressive one than the current power base of Congress ruling India. Okay, so the stock market has already started to price some of this in. It has managed year-to-date returns of 5.86%. Now, forward valuations on the Indian market is about 14.2 PE, which is relatively cheap compared to its historical average of 17.1. Okay, this means that also there is about more than 20% earnings growth predicted by analysts. Right, that's the consensus prediction by analysts of more than 20% earnings growth, which is why we have a forward PE of 14. If the historical average maintains at 17, then in the end we could see a more than 20% rally on the Indian stock market. Now the key point to this upgrade from neutral weight to overweight is premised on Narendra Modi actually winning. Now if he doesn't win, then I think the call might have to be changed. So we advise FAs and traders who want to promote the Indian market to actually watch the elections closely, how it unfolds. Currently, all the polls pretty much suggest a BJP win, right? And it's quite critical that BJP wins in order for all these infrastructure projects to be put through. So we have 3 unit trusts recommended there that proxy India, Aberdeen's, Fidelity's, and Lion Global's, and 2 ETFs that proxy India, the iShares one and the TVXT India. Now the MSCI India, which is the iShares one, that one is the most liquid of the 2 ETFs. So I thank you for that, and I'll move you on now to Sodastream by Kenneth.
Thanks, Josh. Okay, here's just a one-slider update on Sodastream. So just recently the recent price just closed slightly below $40. Sorry about the formatting here, but it says target price still at US $46. Okay, just to give you an update of what's been going on, if you've been seeing the news, you see posted in numerous places that Israeli financial news provider Calculist, they reported that Sodastream was in early talks to sell 16% of the company at $52 per share. And they specifically mentioned Pepsi, Dr. Pepper, Snapple, and Starbucks as potential candidates. And this caused price to spike 8% on Wednesday. However, I'd just like to reiterate that Calculus did not cite any sources, and Sodastream has declined comment. Hence, this is, where I'm concerned, it is still a rumor. Now, obviously, I do believe the Sodastream as the market leader in a newly growing market. They will be prime candidates for partnership. However, this particular piece of news is still a rumor at this point. More importantly, until something more concrete comes out, we should look at whether their growth plans are still in place. And so based on an investor brief on April the 9th, here are some highlights of their continued growth plans. They plan to expand to Mexico and India in the near future. Samsung is now going to have 4 powered by Sodastream refrigerators as opposed to 1 in the US. Within the US, they're going to have a US grocery store push in 2014. Prior to this, they have been retailing themselves at the higher end retail shops. So now they're going to push into the grocery stores. And they're still in process to build their 1 million square foot production facility to meet forecasted demand. So all of these do seem to bode well for the future in terms of revenue growth. Oh, also, Del Monte flavor partnership starting this month in UK and in Italy. Prior to this, they were in the US for flavor partnership. So anyway, investment action. So despite the recent 8% gap up on Wednesday, market sentiment on Sodastream is still volatile, and we do recommend an accumulation only on pullbacks due to the volatility of the stock, and that you will not see, I believe you will not see a prolonged uptrend until they show margin improvement in the quarters to come. However, the potential is there for continued revenue growth and for margin expansion coming in the next few months and next year. Thanks.
Hi, everyone. So just a quick update on M1, which has recently announced its first quarter results. The total revenue was down about 1% year on year, and that's mainly due to lower handset sales volume. However, excluding the handset sales, the service revenue is actually up 2% year on year at 240 million. So the net profit grew over 4% to about 43 million, and that's mainly contributed by increasing subscriber base as well as a higher mobile data usage, as you're all aware that M1 has doubled its excess data charges with effective beginning of this year. So that actually contributes to the growth in earnings. However, the growth was offset by lower international call services, and that's although the international call minutes still remain relatively stable, but more calls were actually made to the lower rate countries such as Sri Lanka, India, and Bangladesh. So average data usage per smartphone user continues to increase, and right now it's about 2.8 gigabyte per month, and that, do note that this is much higher than the lowest data allowance of 2 gig per month for the basic tier plans. More than half of the postpaid subscribers have already now switched over to the new tier data plans, and about 16% still continues to exceed their data allowances. So there's calculate more than about 900,000 subscribers. Some of the future developments are that M1 will continue to enhance its mobile networks, delivering in the coming months voice over LTE. So this will help to improve better voice quality. And by the end of the year, they're expected to roll LTE Advanced. So this is actually faster than the current 4G speed. So this the development will probably help to ramp up the data usage. M1 also continues to build up its enterprise offerings to appeal to the SMEs in the fixed services segment. And the management has shared that they are well on track to achieving the 10,000 subscriber base target on its pay TV platform, otherwise known as MeBox, by middle of this year. So with the 10,000 subscriber base target, they are eligible to apply for the BPL cross carry, and once this is successfully when it goes through, and this will definitely help to attract many soccer fans in Singapore to subscribe to its pay TV platform. Recently, StarHub has actually announced that with effective from June in this year, they're going to charge additional $2 per month for its 4G services. So M1 has also shared that has actually updated its website that they're gonna reprice the 4G for its 4G services from next year onwards. And we expect that Singtel will also reprice its 4G pretty soon, right? M1 still continues to trade at about a forward P about 19 times and offers attractive dividend yield of more than 4%. So we're still maintaining accumulate rating and having a positive outlook on M1. Right. So.
Hi clients. Corp releases its first Q results last week, and sales of $3 million, up 9% year-on-year, and net profit of $339 million, down 5% year-on-year. The decline is mainly due to higher taxation expenses at its O&M division, as well as a write-back of tax provision at its property segment in first Q last year. Excluding the reversal of its provision due to the sales of power budge and properties write-back of tax provision from first Q last year, net profit would be largely in line. Corp also recorded its O&M net order book of $14.4 billion as of end first Q this year, as compared to its net order book of $14.2 billion last year. O&M margins remains healthy at 14.2%. This is a similar level as compared to its 4Q13 margin, and slightly higher as compared to its year-on-year O&M margin. This is despite the conservative profit recognition for its second Brazilian semi-sub
which started recognition this quarter. And going forward, we continue to see a robust operating margin with higher operating margin upside going into 2015. This is mainly due to higher deliveries of its proprietary Jacob KFLB class rig series. Going forward, we see potential upside risks with better than expected O&M cycle should Keppel continue to secure higher order wins going forward. At this point of time, we remain neutral on Keppel Corp with a target price of 11.35. Next, we'll pass on to Lucas, who will share more on its new initiation.
Yep. Thank Nicholas. All right. Lucas here. I'm actually covering the real estate sector and recently initiated on Croatia's retail trust. This is kind of a very unique opportunity for investor. And this this counter basically consists of 6 retail property assets in Japan. Previously, there were kind of like a lot of demand for Japanese real estate as investors are heat up on that side, and people are starting to wonder about whether an opportunity to invest in Japanese commercial real estate actually will come about. And for the first time, this opportunity actually available in Singapore because CRT is listed in the main stock exchange here since May 2013. So yeah, without further ado, just share a bit on this. The share price currently is 0.89 as compared to 0.88, which was actually just disclosed. So the 52 weeks range is between 0.845 to $1.18. So at current share price, the projected distribution yield, annualized distribution yield is about 8.25 to 8.3%. But having said that, they actually have 2 new retail assets as compared to the 4 retail assets when they make their first distribution in end of December in January for their first half of ever since May to December. Their distribution is about 5.2 cents, and therefore we expect this distribution yield to actually increase if the share price remains at 0.89. So market cap is 377.3 million, and the price to book ratio currently is 0.98 times. Bearing in mind that their annual revaluation of their property has not been done yet, and we do expect some upside when it comes to revaluation gain coming in June this year when the FY 2014 concludes. Moving on, okay, I have roughly touched on the company background already. It's listed in Singapore as a business trust. However, I do need to highlight that they have a few similarities to the REITs in Singapore. Firstly, they have committed to pay out 100% of distributable income in FY 2014 and FY 2015. Thereafter, they will pay out at a minimum of 90% of distributable income. So this is really very, very largely in line with the local REIT, as in the REITs listing rules whereby they have to pay out a minimum of 90%. In addition to this, okay, the reason why they are listed as a business trust is because they hold their investments and their assets in a Japanese TMK structure, and this is beneficial to them from a tax point of view. So that but they are committed to provide you with a very a minimum of 90% payout in the rest of the fund of the life of this stock. So the management aim to deliver competitive returns through firstly building on regular and growing distributions, and also long-term capital value growth of their portfolio of assets. To give you guys a flavor of what's happening in Japan right now, so because all their assets right now is currently located in Japan. Currently, Japan's GDP, in terms of GDP, is ranked third in the world. Ever since the Liberal Democratic Party won elections, the current Prime Minister has immediately launched a range of fiscal and monetary policies to stimulate the economy. So what he's trying to do is to actually bring about reverse what they call a lost decade
and they actually provide a 10.3 trillion Japanese yen stimulus bill. And also the government and Bank of Japan commit to the mandate to bring about a 2% inflation rate through quantitative easing. Yep. So in terms of the macro outlook, okay, we are kind of positive that Japan would be able to hold on to its aim and able to deliver. So what has happened thus far ever since December 2012? In terms of JPY to USD, the Japanese yen has depreciated, has become weaker, so that the economy becomes a bit more competitive. In terms of their stock performance, you can see that the Nikkei 225, okay, has actually risen ever since the December 2012. Okay, up until now, it's about 60 to 70% gain. Additionally, in terms of the topics, you can also see that it is also having the same indication that the stock market has went through kind of a really good bull run. Yep. In terms of the retail sectors, Japan currently boasts of the second largest retail market in the world. They have demonstrated very consistent. The consumers there have very consistent spending patterns. I'll get back to this point in the next slide. Okay. Additionally, in terms of the sales growth, the retail sales growth, you can see that there's kind of like a very positive trend ever since the downturn of 0809. So ever since 2011, you can see actually quite a sizable annual growth rate. A key point to note, okay, in April, they actually raised the consumption tax hike from 5% to 8%. This 3% actually was quite, I would say that it's quite negligible in terms of current numbers. In terms of the April numbers currently, we do not really see a very heavy dip in consumer spending. And in October 14, the rate will rise from 8% to 10%. Once again, we believe that should the government and the Bank of Japan able to hold up their side of the bargain, that this will also once again be kind of a muted issue in terms of retail sales growth. In terms of rental value, how are landlords doing? In 2008-09, we saw a very strong decrease dip in the rental rates, and this kind of bottom out in 2012. We believe that based on the current data for 2012, 2013, okay, that the rental rates will actually revert back to a longer term average. Currently, the rental rates on average for the whole of Japan will be about 30,000 Japanese yen per subo per month, and that will roughly translate to about $10.60 Sing dollars per square feet per month. This is just to give you guys a kind of flavor of how their retail sector is kind of doing. The longer term average is about 12.6, and we believe that in line with the broad economy, that the rental rates will actually revert by the long term average. Okay, this is just to get further reinforce my point that the Japan retail sector, they have very consistent consumption expenditure. So although the economy may show some form of volatility in terms of other part of the economy, if you for this consumer consumption spending, we will most probably see a more resilient trend. Final consumption expenditure contribute about 60% of Japan's national GDP. And this has this has only been on an increase ever since 2002. Having said that, we also see total consumption expenditure showing a sustainable increase as the global economy improves and the ratio of job offers to job seeker expand. So you can see on the left diagram, okay, you can see that the 3-year average is trending upwards, and the household consumption percentage of GDP is also about 60 odd %. For over the past 10 years, it ranged between like 57 to 62. There will be not much. We do not see any variance in this the part of the pie that they are going to take up. Okay, in terms of final expenditure annual growth, you can see it's largely positive except in the years 08 and 09. So yeah, once again, it reinforce our view that the Japan retail sector will not see much downside risk. All right, so and this is in terms of retail sector, what we like to look at the capital values and also the cap rate as well. We believe that this is something that we had to point out to you guys. Currently, in terms of for Tokyo, the spread between their cap rate and the bond yield is at 496 basis points, and this is kind of the largest among all the developed cities in the world for Tokyo. So with 4 out of 6 assets for CRT located in Tokyo, we believe that our expectations that there will be a cap rate compression were actually bought well for their valuation, and having certain we having talked to the management, they are also of the same view that they do expect some form of revaluation gain based on cap rate compression. Yep. So the downward potential of cap rate will basically come from the fact that there's an increased investment capital inflow for Japanese commercial real estate, and also the fact that there is heightened demand for it. All right. So coming on to looking at the portfolio assets itself, I think I've vaguely mentioned this on the previous slide. 4 out of 6 assets are located in the Greater Tokyo area, which is actually on the right on the screen, and the remaining 2 is in Osaka and also basically in the Kansai prefectorial. So this is a list of all 6 of the assets, and this is a summary of what the assets are, the details of the assets. So a few highlights. Firstly, the appraised value is the value that licensed surveyors has given to the assets as of the point of transaction. Okay, and the purchase price is actually what CRT paid for. You can see that all the assets, they actually paid lower than the appraised value, except for the smallest asset, which is largely in line. After besides the purchase price and including our transaction cost is actually the same as the appraised value. So the rest of them, they have demonstrated the fact that they are able to get at below market prices. The next thing to highlight, okay, is basically that the larger assets is the 2 Aeon Towns asset and the Malet Shobu asset. These are kind of like the bigger 3 of it all. And also another thing that we should highlight is that the tenure is all freehold, and as of now, the occupancy for the weighted average occupancy for the whole portfolio is about 99.2%. The only one showing any signs of vacancy is actually the smallest asset. Another thing to note is that for all their tenants, okay, basically I think I need to explain this. WALE is actually an acronym for weighted average lease expiry. This is kind of what their tenants, the number of years that their tenants are tied down with them. You can see that for the large part, all of them are in most of them are in double digits. Okay, especially the top, these 2 assets, which is the 2 Aeon Towns assets. For the only one whereby you will see, we believe that I think that you guys will find a cause of concern is actually this Malet Sobu, which is kind of the largest asset, having only a 6.1 years in terms of like weighted average lease expiry of their tenants. And the thing about it is for Malet Sobu, this is a very unique case. This asset actually started to operate in 2008 and 2009. So the rental rates that they were able to command at that point in time was actually very low. Current market rates, okay, is about 20 to 30% higher than the rental rates that they were used to be able to command back then. So the fact that it's only 6.1 years, okay, and they have about 143 tenants leases that's going to expire is actually a good thing, rather more so than a bad point right here. They are able to secure better rates, they are able to make sure that this asset kind of perform out to the market, as compared to right now, okay, the rental rates that is commanding is actually way below market. So this is a good point. This is hardly something negative to focus on. All right. So as a company as a whole, the first investment merit that we would like to highlight is that it actually commands above market yield. We compare this to Japanese REIT due to the similarity in business operating. The factors that actually affect CRT is more closely related to the J-REITs. Secondly, based on the fact that they have very similar tax treatment. So the first, comparing to J-REITs, okay, the average of the yields will be about 4.2%, and currently CRT is actually offering 8.25% based on 5.2 cents annualized. So the fact that they have now additional 2 more assets means that the distribution yield should be higher than 8.25%. On top of all this, there is actually some cap rate compression coming along. So yeah, we believe that this stock definitely shows very strong upside in terms of the stock price, and also it actually offers a very attractive attractive opportunity for investors to who are hunting for high dividend plays. Yep. I provided a list of the operating cap rates. This is very similar to the previous slides. So just to highlight my point that there will be a revaluation gain for this stock price, for this counter. The second thing is that with current strong distribution yield, are we expecting this this to continue? Do we have any, is there any signs that this distribution yield is going to maintain over the next 2 to 3 years, as you guys are, as people who are hunting for dividend usually have a slightly longer investment horizon? So yeah, we actually do expect the strong recurring income to continue. Firstly, because of the very strong, the long weighted average lease expiry profile, and secondly, due to the high portfolio occupancy, and basically it all ties in to the fact that these assets actually demonstrate very strong fundamentals, real estate fundamentals. And yeah, so we believe that the current income stream will actually continues over the next for the foreseeable future, and we do expect the distribution yield to maintain at such levels if the share price is at 0.89. Yep. Lastly, for the last investment merit is that this company is they do have quite a good pipeline of assets that is up to them to acquire. Previously, in the IPO documents, they actually identified 4 Japan retail assets and 2 China retail property development deals. So out of the 4 Japan property, they actually acquired 2 of it, and there's another 2 more that they are looking to acquire. So we do believe that these two deals potentially is value and yield accretive. Besides that, okay, for the China property, I do need to highlight that this is actually a development deal, and they will actually only move in. I would think that they will move in much later. As of now, they are still kind of focused on Japan property. On top of the fact that this deal has already been identified, CRT has also tied down with their sponsor and their strategic partners for this thing called a voluntary, the right of first refusal. So the sponsors and strategic partners have basically give them the right of first refusal for potential retail property deals. So I think that in that sense, there is a very good chance for further growth for this counter. All right, so in terms of valuation, wise, naturally, a lot of analysts will defer to the fact that they'll use dividend discount model or maybe fund a multiple of fund flow to operations in terms of valuing a REIT. For this time around, I believe that the more accurate and the more true to reality kind of valuation will actually be RNAV, because firstly, the REIT actually only listed in 10th of May 2013, and they do not even have a full year worth of income and cash flow for anyone to actually run those other valuation, except for the fact that it's company management. So in terms of RNAV, we are trying to value them on an asset base. It's kind of like, what are they worth right now, today? Okay, how much are they worth? And we actually came out to a total gross asset value of $2.11. The RNAV is about $1.15 because currently the company is quite highly geared, about 50%. And pegging a 10% discount to RNAV, okay, we will actually arrive at a target price of $1.03. So this is our target price for this counter as of now. Yeah, so we have a buy recommendation. We have initiated this. I think we just initiated this counter, and we have a buy recommendation. To recap, the investment rate is firstly the above market dividend yield of 8.25% at 0. Sorry, it's no longer 8.4%, 8.25% as of the price of 0.89 cents. The second investment merit is that we do expect them to have very stable and strong recurring income and distribution, and therefore have a strong distribution. And the third one is basically the fact that there are future value and yield accretive growth in terms of acquisition assets. So the target price is $1.03, and the expected annualized yield is 8.25% at 0.89. Yeah, with that, I come to the end of the presentation. And is there any question on this, on today's CRT and any other counters that we have spoken of today? Please just let us know.
I have a question here on a new IPO called QT Vascular. So, looking at the prospectus, it seems a bit speculative from our point of view. The treatments have are unknown in terms of the medical community's receptiveness to them. The company made 28 mil loss for 9 months last year. And according to newspaper reports, it will be IPOing at about 28 cents. The post-dilution NTA is about 9 cents, I think. So not enough information to be known, even from looking at the prospectus. Thanks.
All right. Shall I just take the question? Please advise on. Sorry. The question goes on Croatia's. How do you see the JPY and SGD forex affecting total projected yield and price gain? All right. Firstly, I think let's just dial a step back. When speaking to management, the CRT management actually did say that they do not have a hard and fast rule as to how are they going to hedge their exposure to JPY, SGD, but they do say that they have a 2 quarters hedge, a forward hedge constantly. So what does that mean is that as of maybe on 1st January, they will have hedged their distribution in June, which in other words, like for now, the next distribution will be in June. They will actually have already hedged their distribution already. So in that sense, they kind of reduce the volatility in terms of forex when it comes to the projected yield. Yeah. So I hope that answers your question. As in, that's how they constantly hedge their exposure. The thing about it is they do have kind of a high visibility because their assets are largely very, very stable in terms of the income that's coming in, and the distribution can be largely predicted from maybe 2 quarters before the actual distribution itself. So in that sense, I believe that the volatility of JPY to SGD in the short term will not be that highly impacted. Yeah. And the next question on CRT, is there any distribution income tax in Japan? The answer to distribution income tax in Japan is yes, but for CRT under the TMK holding structure, it's an investment holding structure that's very typical for Japanese for Japan real estates. Okay, that any distribution made, okay, is not taxed. So yes, CRT actually use the investment holding structure, and therefore there is no distribution income tax in Japan for CRT. The next question, does CRT invest in any Tokyo Olympics 2010 projects? CRT is the second retail. Who is the first retail in Japan? I think that there may be some miscommunication here. CRT is the first retail business trust in Singapore that's listed in Singapore. So it's not actually not second. So it's the first for it that's listed in Singapore. As for your previous question, does CRT invest in any Tokyo Olympics 2010 projects? No. They do not invest in any of those directly related to the Olympics projects. But where they are located, okay, they do stand to benefit greatly from the Olympics in terms of their retail performance for the tenants, and that will ultimately flow through to the landlords. So I hope that answers your question. The next question, is the high gearing on CRT a major concern? Currently, the gearing is at about 50.1% or 50.1 to 50.3%, and is this a major concern as of now? In terms of valuation, whether they will hit the 60% mark, I do not think that this is really a very great concern in that sense. So no, and on top of that, CRT, due to the fact that they have very strong connections, and obviously their strategic partner is Marubeni and Daiwa House, okay, they are able to get very, very low cost borrowings. Is that their borrowing cost is about at 1.56 to 1.6%. It ranges between these two, and the floating has already been swapped, and their fixed rate for the next 5 years is 1.56 to 1.6%. This is actually really, really low, and is only available to the really big player, the really big real estate players. So no, I do not think that there's any major concern for the high gearing, because for the large part, it's really taken care of. Pertaining to CRT, does it pay its dividend every quarter? No, they pay biannually, so once every half a year. The next question, for CRT, the REIT is very compelling, yet the price has remained very stable at 88 to 89 cents. Why the lack of investors' interest? For the start, I think that is the first retail, as of now, currently a portfolio is just Japanese retail real estate, and this is kind of something new for the market. So it takes time, okay, for the investors to actually understand the Japanese retail market, and we believe that in time to come, with greater visibility and the fact that when their full year earnings comes in, okay, the even greater than currently visible yields will actually entice more investors. So the price has remained stable at 88 to 89 cents, and I think that there's actually much further upside for this counter. The next question, what will be the catalyst for price appreciation for CRT? I think that besides the fact that there are future growth, if they were to announce their future acquisition, that will actually be one of the potential catalysts. But I think that the major catalyst is still the dividend. At 8.3%, this is only based on 5.2 cents, and that is only on 4 assets. Now they have another 2 assets in, and their distribution yield is definitely higher than 8.24%, and this will actually come true. This story will actually become the truth in July when they actually announced their first FY 2014 results. So I think that will actually be the catalyst, which is just maybe 1-2 months away, and therefore now it is really the point in time for investors to move in for such a counter if they are hunting for a high dividend stock. Okay, any comments on the quality of CRT tenants? Allow me to just dial back to this slide. Okay, portfolio asset summary. I not really included this. So if you do want to find more information on the quality of the CRT tenants and other details on the properties, okay, do refer to my initial report. There is available through Poems. Just to answer your question here, the quality of their tenant, Aeon Town, the 2 Aeon Towns assets are under a master lease to Aeon Town. Aeon Town is the biggest retailer in Japan, and that's why you see that their weighted average lease expiry is 14.5 years. So in the sense, the tenants that we are talking about is the master lease, and he was subleased to other tenants. So we are just talking about Aeon Town here. So for the first 2, it's a very huge, very stable, and very well-paying master tenant. For the other big property in Malaysia, Shobu, it is managed by CRT, and there have about 243 separate lease contracts under about 235 tenants. For a large part, 100 of them is going to expire. About 100 plus tenants leases are going to expire soon. And the good thing about it is these tenants a lot of them are very low paying rental, because when they first started, it's in 2008-09, and at market rate at that point in time is 30% lower than current day market rate. So the tenants that they're looking at is right now, okay, because the surroundings of this Marriott Shobu Mall has more or less built up, okay. So you're looking at a lot of international brands like H&M, and these guys are already on the verge of securing. Some international brands are already on the verge of securing huge spaces for Marriott Shobu. So it's actually looking really, really good for that. So I believe that these 3 are the major assets that you guys are of greater concern for you guys. So I hope that answers in the quality of CRT tenants. Right now, they're more moving towards the higher the brands, the international brands, and the bigger players. So it is improving, and it's currently for the big assets. The quality of the tenants and the tenant mix for the assets are really, really good. On CRT, this is the next question. On CRT, does it buy insurance to mitigate total loss in the case of earthquake? For the most part, where the assets are located are not along any of the historic fault lines. So I am unable to answer the question as to whether it buy insurance, but as per information provided, okay, it's not located along the major fault lines, so we do not think that that is really a very high risk. Obviously, I do understand the concern that there is in Japan. It's always a risk to be in the case of earthquake and whatnot. But for the most part, no, I do not think that this would be actually one of your top concern or the top risk factor in your analysis of the company. So the next question, what are the risks for CRT to look out for? All right. The major risks, I think I would identify the major risk as a long-term FX volatility between JPY and SGD. Although they do gear 2 quarters forward, okay, the long term, if JPY were to continually over the years become so much weaker than SGD, then definitely that would be a concern. But having said that, I do not see that happening, because for large part Singapore are preaching stability, and it is the same for the Japanese economy. So I think while I think that will be the biggest factor because of the fact that the distribution is in Singapore dollars as compared to the business operating currency of JPY, I do not see actually much weakness in that sense. In fact, I do think that in the long run, the Japanese will actually become slightly stronger than what it is now. But that will actually be the really long run. Yep. Take a break.
Hi, there's a question asked with regards to whether will M1 merge with either Singtel or StarHub in the long term run. No, we do not really foresee any merger, especially in this telecom sector, as the industry is closely regulated by IDA, or Infocomm Development Authority of Singapore, as well in the Telecom Competition Code. So under the Telecom Competition Code, IDA will take any resolute measures to promote more effective and sustainable competition in this market, and that such measures will also include curtailing any concentration of significant market power. So we think any merger is highly unlikely.
Hello, this is Lin Xin. Someone inquire about how to find the trust in Poems. You notice that on the Poems website, right? There's on the top there's 7 tabs. The second tab is on financial services. So when you click on that, there will be a drop down list. Look for unit trust, or you can actually go straight to the unit trust website at www.poems.com.sg/unit trust. Yep.
There's a question on Keppel's O&M division. O&M actually stands for Offshore Marine Division, which is our main focus, especially in the offshore marine sector. There's also another question on PACC. PACC is expected to launch its IPO this week, and one of the few main investment merits for PACC is, first, it's the largest Asia OSV provider, and it's also ranked among the top 5 OSV provider globally. Second, it's experienced management team. It is also one of the member of the Corp group. And third, which is one of the main area of growth, which is the fleet size increase over the next 2 years from 112 vessels currently to 125 vessels by 2015. In terms of valuation, FY15 PE should be trading around 9 to 10 times PE. Currently, there isn't any good comparable for PACC at the moment within the offshore marine Singapore space. But having said that, most of the offshore marine provider within the Singapore space is trading around like 11 to 12 times PE. So investors, hope that all this clarifies your doubt.
Okay, hi, Ken here. Question on Sodastream. Does Sodastream use any artificial chemical in their drink flavor making? For more product information, can I suggest you actually go to the Sodastream website? It's a highly visible website with good traffic. You can see all the things that they offer there. But let me just say about Sodastream that they're not exactly a drink maker. What they are is that they are the premier carbonizer, and they partner different drink brands. So the drink brands and drink flavors, they have their own brands, and with their own brands, they do have all sorts of colas and flavors, which uses natural sugar as well as artificial sugar, depending what you want. But at the same time, they are partnering other companies, other juice companies, so that you can get carbonated versions of juices. That's why consumers have a lot of choices, and those who are health conscious also have a healthy choice when they get Sodastream. Okay, next question's on the US market. With the recent correction in the US market, do you think the correction is over? Now that's a very good question. Now, we know that last month there was quite a big drop in share index price for the US market, and then for the last week we had some sort of recovery. This behavior is coherent and cohesive with the guidance we've been giving since early this year. If you recall, we mentioned early this year that early in the year there should be a minor correction, and there will be a major weakness in the middle of the year. For more information, you can see our archive webinar on February 10th. The whole thesis for the year is actually spelled out there. So far, things have gone seemingly to guidance. Based on that thesis, even though there has been a short-term recovery, we are getting into a zone which valuations seem very stretched, and sentiment also is not conducive for an extended run at this point. Hence, even with the short-term recovery, they can still be short-term can still go higher, okay? But we would caution investors to have more of a trading strategy at this point in time, a range bound strategy, rather than to go all in bullish. Okay, so that's because short term we seem to be cycling up, but at the same time, sentiment, breadth, as well as under indicators are not conducive for a prolonged upside move for the US market.
Hi, sorry, this is Lucas again. I think that one thing to note, I think that previously there's a question on whether the earthquake can potentially derail the whole business and actually cause any issues with them. We do need to note, if you refer to my initiation report, that all the assets is built on or later than 07, which under the 1985 rule or 1980. Okay, I can't really remember exactly, but 85 to 87, there is a rule whereby all their buildings will have to be retrofitted with earthquake, as in the building blocks right below the actual property itself had to be retrofitted with an anti-earthquake structure, whereby it prevents the structure from, it actually allows the integrity of the structure to retain itself even during an earthquake. So I believe that sort of do mitigate the fact that the earthquake would be of a very high risk, but definitely I'm not saying that that we totally no risk from earthquake for sure. I would think that if there were to be a very massive earthquake, I would think that it actually stems from the fact that the economy will actually suffer and thereby impacting its financial performance. But the property assets itself is definitely retrofitted with the technology to actually sustain an earthquake, unless it is of catastrophic proportions. So, okay, moving on, there are further questions on CRT. This question, in one of your slides, as in you, as in me, I mentioned that CRT has a sponsor. What is the name of the sponsor company, and are the sponsor big in a general and relative sense? All right. The sponsor for CRT is actually, okay. Let me just first talk about the sponsor. Definitely, I would say that, well, it's reputable. But I think that what is more important and what is more of play right now, okay, is actually Daiwa House and Marubeni. These are their strategic partners, and these are the two that actually contributed the initial portfolio properties. And in fact, also the two recent acquisition is coming from these two strategic partners. Daiwa House is one of the biggest in Japan in terms of the real estate place. So definitely, and Marubeni, obviously, once again, they are one of the bigger ones in Japan itself. So in terms of relative size, if compared to within Japan itself, these are definitely the big guns. So I would think that actually answers your question more adequately than just talking about the sponsor. It's more of the strategic partners. And the strategic partners, okay, have voluntarily offered a right of first refusal for all their Japan retail assets or deals. That means, in other words, if they were to either want to buy or sell, okay, if they want to buy and they actually broker a deal, that they'll actually offer the deal up to CRT first. Okay, and if only CRT rejects before they will proceed with their acquisition. And in the term of when they want to sell their property, they'll allow CRT to actually have allow CRT first dips on buying the property that they want to sell. So either way, okay, this is definitely very very positive point that we do have to understand in terms of their growth over the next few years. So I hope that answers your question as to whether they are having the proper tie-ups with the right guys. All right. The next questions. Okay, there seems to be a recovery on property counters. Do you think this is sustainable? And what are your top 3 picks for the sector? And what top counter to avoid? Yes, I do agree that there is over the past 10 to 15 trading days that there is a recovery in the property counter, largely because investors are of the view that they have overcorrected. So the keyword here being the fact that it's overcorrected. So do I think that the growth over the past 15 trading days is sustainable at such rate? I don't think so. You can't expect this growth, the growth in the share price of the big property counters as what we've seen over the past 15 trading days to really continue for the rest of for the remaining months of 2014. This increase is really more of like a fact that it's a pullback more so than a value growth. Is a sign of there's a growth in value of a company. So no, this is I do not think that the growth is sustainable. The share price movement is sustainable. But having said that, I think that the property sector, I do agree with other. There's a consensus outlook there that the property counters are overcorrected. In terms of the top 3 picks, I think that I actually did cover Keppel-Land, CDL, and obviously right now it's Croatia's. So I think that this would definitely be one of our top picks. I wouldn't go so far to say that these are the outright sure bets, but definitely we have very very positive outlook on these 3 counters. CDL, as per presented previously to you guys, okay, the investment valuation still stays intact. I presented to you guys CDL before the price actually shot up, and my target price still stays, okay, and there's still strong upside for this very big counter, largely because previously this is the one that has corrected the most among the big 3s. So the investment value, investment merit still stands. CDL will be one of our top picks in terms of value, in terms of what they are holding, their heavy assets, lowly geared, and they are able to take on any good opportunities or deal that's coming up because they are the lowest geared and they really have the financial power to pick up such investment opportunities in terms of development or be it investment property or be it development opportunities. That's one, and definitely the other one I would think that you guys should focus on actually CRT, which I think that is really it's really a very good opportunity. It doesn't really come that often, especially when right now they have 2 additional properties, and if you to go in right now or over the next one month or so, okay, before they distribute their FY, their full year distributions, okay, you actually see that the investment, the distribution yield is actually higher than what I put, higher than 8% even. Yep.
question on whether the STI's relative resilience to the US markets is sustainable. Yes, we think so. It is because the STI, unlike the S&P 500, did not have an outperformance year last year. In fact, it went flat, whereas the S&P had a 30% rally. That's one reason. The other reason is that valuations on the STI are low. It's about 12 to 13 times, whereas the S&P 500 is about 17. So valuations are more stretched in the US. As Ken said, sentiment is more stretched in the US, whereas that is not the case for the STI. Thanks. Oh, there's another question here on whether we think Bastard's outperformance will continue. It's rather close to my target price of 205. But I have to say that it could be raised because they have another development. They have an investment, in Beijing, which is worth about 50 mil. It's called Beijing Tongzhou, which we've found out from Perennial's takeover of St. James that the valuers had valued that asset at a few billion, and so that works out to be that means Bastard's stake works out to be 50 mil. So actually, Bastard's undervaluation is even more severe because of that. I'm going to wait for the full year earnings to come out before I do anything to my target price for the time being. Thanks.
Okay. Last question. Who are the major shareholders of CRT? I can't really, besides from IPO, their own management, their own guys, the holdings. I can't really identify the other major shareholders. They are more of institutional funds. And also there are quite a majority of those who have above 5%. Okay, there will be a number of maybe 6 or 7 of them who hold 5% each. Are all investment funds. So yeah, those are the major shareholders. Besides the fact that it's Croatia's management itself and the strategic partner of Daiwa, Maru Bandi, hold 6%. The own sponsor, the own management, I think Croatia's group hold another 20 or 30%. So yeah. Those are the major shareholders. I can't really. There's no other. The rest of the substantial shareholder above 5% are investment funds. Yep. Hope that answers your question. So with that, we have come to the end. I'm Lucas here, and you can always, if there's any further question on CRT, you can always look for me. The report is actually on Poems, and yeah, I believe my contacts are there as well. So with that, I come to the end for this week's presentation. I hope that you guys actually gain some insights and information of the market, and we look forward to having you around next week. All right. Thank you.